In May 2026, Dollar Tree walked onto a stage and told Wall Street the best story it has told in a decade. $5 billion in sales in 13 weeks. Profit per share up 38%. The stock jumped almost 18% in a single day. And buried in the same report was one number nobody put on a slide. Traffic, down 1%. Everything went up except the customers. That single line is the whole mystery. Dollar Tree is earning more money from fewer people walking through its doors. Same-store sales rose 3.5%, and every bit of that came from a 4.5% jump in the size of the average basket. Not more shoppers. Bigger receipts. So the question isn't whether Dollar Tree is dying. It isn't. The question is where everybody went and why the company doesn't seem to want them back. Dollar Tree turns 40 this year. For 35 of those years, the promise was one sentence long, and a child could understand it. Everything costs $1. You could walk in with a crumpled 5 and walk out with 5 things. No mental math, no comparing tags, no quiet humiliation at the register when the total came in higher than what was in your pocket. That certainty was the product. The merchandise was almost incidental. Then, at the end of 2021, the dollar broke. Prices went to $1.25, rolled out across every store by early the following year. Customers grumbled and mostly forgave it. Inflation was eating everyone, but the ceiling, once lifted, kept lifting. $3, $4, $5, then $7. Each increase arrived with the same corporate word, assortment, as if the store were doing you a favor by charging more. The next one didn't get an announcement at all. In 2025, shoppers simply started finding small red stickers pasted over familiar tags, moving items from $1.25 to $1.50. By late that year, $10 items were appearing on the shelves, and base prices on entire categories had drifted to $1.75. From $1 to $1.50 is a 50% increase in 4 years. To a household counting coins in the parking lot, that is not a rounding error. That is the difference between buying the thing and putting it back. The company will tell you accurately that around 85% of the store still sits at $2 or less. It will tell you the strategy is working, and by every financial measure it is. But something else broke along the way, and it wasn't the price, it was the certainty. Walk into a Dollar Tree in 2026, and you cannot know what anything costs by looking at it. Some items are tagged, many aren't. The company installed price check scanners on the walls, and shoppers immediately understood what that meant. One customer described her daughter tossing a basket into the cart, something that looked like it should be $1.50, maybe $1.75. The receipt said $7. Another put it more bluntly, telling USA Today that she won't buy anything over $2 in that store. Not because she can't afford it, because she thinks it's greed. A scanner on the wall of a dollar store is a small object with an enormous meaning. It says the price is now a question. And answering questions costs time that people working 2 jobs do not have. So who's the store for now? Dollar Tree has been unusually honest about this. 3 million more households shopped there in a recent quarter than the year before, and roughly 60% of those new shoppers came from homes earning over $100,000 a year. The fastest growing customer group is households above $125,000. Executives call this trading down, and on an earnings call, it sounds like a triumph. Here's the uncomfortable part. The 6-figure shopper is a visitor. She comes when eggs get expensive and leaves when they don't. The low-income shopper was a resident. She came every week for years because there was nowhere else. And in the summer of 2025, Dollar Tree's own chief executive said the quiet thing out loud, describing the challenges facing lower-income consumers across their entire lives as a cause for caution. Caution. That's the word a company uses right before it stops building for you. Watch what the company did, not what it said. In 2015, Dollar Tree bought Family Dollar for $8.5 billion, the chain that served the rural towns and the poorest neighborhoods, the places with no supermarket for 20 miles. In 2024, it announced roughly 1,000 of those stores would close. In July 2025, it sold the whole business to 2 private equity firms for just over $1 billion. Net proceeds, around $800 million. Roughly $7.5 billion of value gone. You can read that as a failed acquisition, and it was. But look at the shape of it. Dollar Tree sold the half of itself that served the poor and kept the half that sits in suburban strip malls, and then spent $595 million in a single quarter buying back its own shares. Nobody voted on that. The customers simply found out. Meanwhile, the stores kept coming. 400 new Dollar Trees planned for 2026 against 75 closures. More than 9,300 locations already. And here, the story stops being about a retailer and starts being about neighborhoods. In December 2025, food economists at the University of Florida published research in the American Journal of Agricultural Economics, asking a simple question. When a dollar store opens, does food access get worse? Usually no, but in urban census areas that had only one grocery store to begin with, about 14% of them, the effect was real and measurable. Access declined, and it compounded. The impact, one of the authors said, grows with every dollar store that opens in a given neighborhood. These are the same neighborhoods with higher poverty, fewer cars, and more people depending on the bus. The store arrives, the grocery struggles, the grocery closes, and then the store raises its prices. There is no villain in a boardroom cackling about this. There is just a spreadsheet, quarter after quarter, doing exactly what it was built to do. The workers noticed something too. Since 2017, federal safety inspectors have opened more than 500 inspections across Dollar Tree and Family Dollar locations and found hundreds of violations, the same ones over and over. Blocked fire exits, boxes stacked in front of electrical panels, aisles you couldn't walk down. In 2023, the company entered a corporate-wide settlement covering more than 10,000 stores. Understaffed stores don't unblock their own exits. To be fair, and this matters, plenty of smart people think Dollar Tree is playing this exactly right. Analysts at Telsey Advisory Group argue the core customer is sticky, and the multi-price rollout gives the company a long runway of growth. Retail analyst Neil Saunders points out that a wider range of prices is the best tool Dollar Tree has for absorbing tariffs without gutting its margins. Goldman Sachs, cautious on the stock, made the sharper observation. The company's most frequent shoppers show weaker engagement than they used to, while Walmart, Dollar General, and Five Below fight for the same wallet. Dollar General posted a nearly 5% gain in same-store visits in January 2026. Dollar Tree posted a decline. There's one more force squeezing the shelf, and it comes from Washington. Almost everything in a dollar store crosses an ocean before it reaches a shelf, which makes Dollar Tree unusually exposed to tariffs. The company has negotiated with suppliers, moved production, and absorbed what it could. It has also, by its own account, taken price. When the cost of a container goes up, a chain built on a fixed price point has exactly two options: shrink what's inside the package or break the price. Dollar Tree has now done both, repeatedly, and each time it has told customers the change was about giving them more choice. And underneath all of it, Temu and Shane quietly took the thing that made Dollar Tree magic in the first place: the junk drawer thrill. The $2 impulse. Now it ships to your door for less. So here is where it lands. Dollar Tree is not collapsing. It has around $1 billion in cash, no borrowings on its credit line, guidance north of $20 billion for the year, and a stock that has climbed back near $130 a share. By every number a shareholder cares about, this is the healthiest the company has been in years. But healthy for whom? A store can survive its customers. It can trade the woman who came every Thursday for the woman who comes twice a year when the news says prices are up. That trade works beautifully on a spreadsheet, and it is invisible on an income statement because a bigger basket covers a missing body, right up until the visitors go home. Nobody goes to Dollar Tree anymore, and it isn't because Dollar Tree failed. It's because Dollar Tree succeeded at becoming something else. 40 years ago, it made a promise so simple a kid could hold it in one hand. That promise was never on the shelves. It was on the sign. The tree is still standing in 9,000 parking lots across America. It's the dollar that fell. If you liked this video, don't forget to subscribe to the channel and like the video. There's a lot more coming.